Hello, everyone. So in today's talk, my plan is to talk through the impact of the COVID-19 pandemic and the associated social distancing restrictions on the labour market. Without exaggeration, the scale and the speed of the impact on the labour market is unprecedented. Although, of course, this really is a unique situation in which the economic contraction that we're seeing is health policy driven. Now, the situation is evolving as we speak. State and federal governments constantly announcing their lifting of various restrictions. So I'm going to be presenting the incoming data to early May and then discussing all of the risks around the possible outlook. What I wanted to do was to set the scene of the labour market pre-COVID. So this is data using the Household Labour Force Survey for March. Now, the Labour Force Survey is the most comprehensive data source we have on the labour market. So I'll use that a lot. But I will say this, that the Australian Bureau of Statistics over recent months has shown remarkable agility in providing us with new and timely data sources over recent months to help us really understand what's going on in the labour market. So this is where we were in March. The employment to population ratio was close to record highs, almost where we were at the peak of the mining boom. And this was pulling in more people to participate, which is the pink line at the top. In particular, we were seeing a lot of older workers deferring retirement, and we were seeing a lot more females either staying in the labour market or coming back to the labour market. The unemployment rate was around 5.25%. Now that's still a little bit above the unemployment rate in which we tend to see wage and price inflation start to accelerate. So there still was some spare capacity in the labour market. Underemployment was also reasonably high because many of the part-time workers in the economy were looking to add hours. Then I wanted to step forward, and this is only a few months ago, but to me it seems like, quite a long time ago that we started to see these scenes. So just to provide a little bit of a chronological background for all, the restrictions on the travel were the first to be introduced as the COVID-19 virus spread around the world. International border restrictions were introduced on the 1st of February for all arrivals coming through from China. And then by the 20th of March, Australia's borders were closed to non-residents. And these measures had a really large impact immediately on the tourism and education sectors. As the number of cases of the virus spread in Australia, Australian and state governments also then started to impose social distancing and containment measures. People were encouraged to stay at home as much as possible and limit contact, only venture outdoors if we needed to. We saw a large amount of businesses shut, such as indoor sporting facilities, pubs, clubs, restaurants and bars. And then, of course, as you would know, we saw a shift to remote schooling across the country, which gave every parent a newfound appreciation for what you do each day. And of course, we saw a significant increase in the share of people working from home. While all industries have been affected by the containment measures, the extent of the implications really vary wildly. Under the ban on public gatherings, we saw activity in the arts and recreation sector, as well as accommodation and food services, really drop significantly, with activity effectively curtailed in some parts of it. So I will talk a little bit around the different industry implications later in the document, later in the presentation. But ahead of seeing any of this play out in the official data, we started to see things like I've got in front here, large queues of people registering for the unemployment benefit, which is the job seeker, by late March. The government also, at the end of March, also announced the introduction of what's called the JobKeeper payment. Now, this is a $1,500 per fortnight wage subsidy that was passed into legislation in early April. That was basically designed to encourage firms to hold on to workers and provide a wage floor for eligible employees. For some eligible employees, it meant they actually got a pay increase. So if you were receiving less than $1,500 per fortnight, you received a pay increase. And for others that were receiving more but had been stood down or were on reduced hours, it provided a floor to which wages would fall. So now I'll turn to the data that we saw come out of the labour force survey in April. This reference period for this data for April, it's important to really stress this, is that the households were asked about their labour market outcomes between the 29th of March and the 11th of April. So all of the things that I had mentioned before around the social distancing restrictions and the travel bans, all of that should be captured in the data that we see. But because the JobKeeper payment was introduced on the 30th of March, it's possible that what we're seeing here does not capture the full extent of the JobKeeper program. But you can see here with the orange line there that total hours worked fell 9% in April. Now I've only got a short time series on this graph, but if I took this back further, you would see that it's the largest monthly fall in hours over the 42-year history of the labour force survey. Just to provide some perspective on how big the fall in hours was, during the 1990s recession, hours worked fell by 6% over an 18-month period. And we're talking here about a fall of total hours of 9% in 1 month. Now that total hours fall came about through job losses. We saw a 4.5% fall in employment in the quarter, and we also saw a large fall in the average hours worked by people that kept a job. I find this diagram that I took from one of the labour market explainers that it's on the website from Jackie's team really helpful as a good framework for thinking about the various effects of the virus on the economy. The labour market in Australia is really quite dynamic. People are flowing in and out of employment, unemployment and the labour force each month. But the vast majority of people that are employed stay employed over the month, and the vast majority of people that are not in the labour force also stay outside the labour force. But I just wanted to give some perspective in terms of the numbers that we talk about. So the numbers that I'm just about to talk about are really just an average over the past 20 years. So on average, 1% of the people that are employed each month become unemployed each month. Now, to be classified as unemployment, and this becomes important for thinking about the labour market during April, to be classified as unemployed for the labour force survey, you need to be actively looking or actively searching for work and available to start. Now, around 3% of employed people leave the labour market. You may retire or just for other personal reasons, you may leave the labour market. But on average, around half of the people that are unemployed each month stay unemployed the following month. And some people, of course, get a job, and some people become discouraged searching for work, and they choose to stay out of the labour market. So I think that's just a really helpful framework for thinking about the different flows that I'm about to show. So back to what we saw in April. That 9% decline that we saw in total hours worked, and then the 4.5% fall that we saw in employment, that 4.5% fall that we saw in employment, people that lost their job either become unemployed or they leave the labour market. So you see a rise in the unemployment rate and a decline in the participation rate. The scale here doesn't really do much justice, because actually more than 3/4 of the people that lost a job during April left the labour market rather than went into the pool of unemployment. So I really wanted to sort of discuss this a lot, because I think it's a really important to think about what's going to happen to the labour market over the next few months. But really, when I talk about that fall in, to give some more perspective, the fall that we've seen in employment is basically equivalent to nearly 600,000 jobs were lost over the year. Over the month, sorry, and that's the largest that we've ever seen. So why didn't the unemployment rate rise as much as what we thought? If you go back to this graph here, you can see that the unemployment rate rose by around 1 percentage point to 6.2%. Now, that's certainly a bit of a surprise for many people because people had been looking about what was happening in the US and Canada. We'd seen large increases in, as I saw before, queues to claim job seeker. And there's a number of different reasons why the unemployment rate didn't rise as much as what people anticipated. And it really comes down to a couple of things. One, if you remember, to be unemployed, according to the Labour Force Survey, you need to be actively searching for work during this time. And if you think about where we were in early April, with a lot of industries effectively shut, people worried about the virus, it really was difficult to actively search for work for a lot of people over that period of time. But I think a really important point, a policy change that happened that saw the unemployment rate not rise as much as what you might necessarily have expected, is that we saw changes to the requirements to search for work to receive the job seeker. So typically there's obligations to receive the job seeker payment. You need to be demonstrating that you're actively searching for work. And around about late March, those restrictions were eased. So it wasn't necessarily the case that you needed to be actively searching for work to receive the job seeker requirement. And so when the Labour Force Survey asked people, why didn't you, if you said that you were outside the labour market and they said why, the bulk of people said they weren't looking for work or that they were only passively looking for work. So it's a really important thing for us when we're thinking about what will the unemployment rate do over the next few months, is to think about whether or not people will be able to, this month, next month, and going forward, whether or not people will be able to actively search for work as restrictions are lifted. And of course, at the moment, the job seeker requirement is to end on the 1st of June. That's the government plan at this stage. So I think that may see a bit of a change in the flows between unemployment and also the people outside the labour force. The other thing that's different, and it's sort of a bit of a technical point here, is that the people that had been a lot of people had been stood down on 0 hours. Those people were still classified as being employed. So even if you'd been stood down, as long as you thought that you still had a job to go to, or that you may have been receiving the JobKeeper but on 0 hours, you are still classified as being employed. And so there's a large group of those people that remain employed. And there's a slight difference for those people that have been looking at the US or the Canada numbers. Those people are actually treated as unemployed in the US and Canada numbers. And so the Australian Bureau of Statistics calculated that if we were to include those people that have been stood down, the unemployment rate would have risen around 3 to 5 percentage points higher than what we saw in the month of April. So as I talked about, there are a large group of people. So the fall in total hours worked was driven by job losses, but also the average hours worked also fell for the people that left a job, kept a job. And a large part of why that was the case is that the large group of people found that they had gone from working part-time or full-time to working 0 hours for economic reasons. They'd either been stood down, there was not enough work available, or that the business had sort of basically shut down. And so that saw a fall in average hours worked. We saw a large fall in average hours worked of both part-time workers as well as full-time workers. Even notwithstanding that, a large group of people, we certainly heard through our liaison program and other reports from business services that a lot of people were moving. If you were working 5 days, they moved to 4 days a week and so forth, really because of slowing demand. So we did see a large decline in the average hours worked. Now, how that then sort of translates into thinking about spare capacity in the labour market, that'll show up in a large increase in the underemployment rate, which you can see here in the month of April. So that rose to 13 or 14% in the month of April. And really what the underemployment rate is telling you is that there's a large group of people that are working, less than 30 hours per week that would like to work more hours. And that's a really large spike that we've seen through that process. And that sees, when we think about, rather than necessarily just the unemployment rate, it's also important to think about things like the underutilization rate, which kind of captures both the people that have lost their job, but also people that are not working the hours that they'd like to or that they used to. And so I think the underutilization rate, particularly over this period, is going to be particularly important for us to kind of capture just how bad the labour market becomes. What I wanted to do now was really focus in on some of the groups of people that have been particularly most affected by the COVID-19 pandemic and the containment restrictions. And really, it's no surprise to all of us that it's the people in sort of household services industries, such as accommodation and food and arts, that have been most adversely affected. And one of the things that we've really picked up upon through our liaison program, business surveys, and the incoming data is that actually all industries have really been badly affected by this, but to varying degrees. So this is just a graph to really demonstrate the size in terms of employment. So the brown bars are telling you the size of employment. And you can see there that household services, which captures also healthcare and education, that's been a really large driver of employment over recent years. And of course, that's been the most impacted over recent months. But importantly, it's also where a large share of the people that are working casually are located. So when we look about in accommodation and food, over 60% of those people were working casually. Now, why that's important, obviously there's the JobKeeper package covers a large group of people, but it doesn't cover casual people or people that have been working for less than 12 months. And so certainly in those industries like accommodation and food, which employ a lot of young people, also has a large degree of turnover. So there's lots of people that are either working multiple jobs or that they haven't been in their job for a long period of time. So this is just to kind of set the scene. I mean, even in the education area of the economy, 1 in every 5 workers is a casual worker. And so particularly in the tertiary education system, these were the kind of areas that people were worried about, and education exports were effectively curtailed. So I wanted to show you this data set. So this is new data that the ABS have put together with help from the Australian Taxation Office. And what it does, it uses the single touch payroll data that the ATO are collecting. And so it's capturing a large part of the Australian business population, and it allows us to look at really timely data. So it's slightly different than the labour force survey data that we tend to rely upon, but you can see here that the most recent data that we got last week ends at the 2nd of May. So we're getting this data every couple of weeks, and it's up until early May. So this is great data for us, but there are some slight differences. For example, when they talk about jobs here, it's a slightly different concept to the jobs that are in the LFS, because it's just recognizing the payroll system is just recognizing whether or not someone has actually received income over that period. So if you are receiving the $1,500 JobKeeper payment, you will be picked up here. But if you've just been told you've still got a job, but we can't pay you at the moment, so you would be picked up there as a decline in jobs. But you can see here, since mid-March to early May, there's been really, really big declines in the accommodation and food and the arts and rec areas. So, 1 in 4 jobs, this is equivalent to in accommodation and food services, has been lost over that period of time. But you can see, I mean, an interesting point here is that as we've been hearing through our liaison program and business services, a lot of businesses, a lot of industries have actually been affected by what's going on here. So it was fairly obvious, given the actual containment restrictions, that we would see large declines in those hospitality industries. But I think possibly somewhat surprising, given what we've necessarily seen with the restrictions. We've seen somewhat big declines, 7 or 8% declines in construction, as well as in areas like the professional, scientific and technical services, as well as manufacturing and retail. So we've been able to watch this over every 2 weeks. We've been getting an update and an update. And so I've just given you here a really big sort of snapshot of what's happened since mid-March. But interestingly, in the last 2 weeks, late April to early May, we did see a bit of a modest recovery in some of the worst affected industries. So it might have been the case that as restrictions have been lifted, or as more as more businesses take on JobKeeper payments, perhaps the job losses have been sort of mitigated to some extent in some of the hospitality industries. Perhaps more concerningly is that we've seen a big pickup in the decline in jobs in the professional or business services like professional, scientific and technical and construction services. So it's a bit early at this stage, but it's possible that what we're seeing there is sort of some second round effects as demand has slowed in the economy more generally, because household income is lower. Then what we're seeing is that people aren't necessarily wanting to pay consultants or architects and things like that. So there's sort of this second round effect that we might be starting to see spreading out to the broader economy. And I think there's also there's interesting parts of what's going on. You can see that there's been a small decline in healthcare jobs over that period of time. But within healthcare, obviously, there's been strong demand for hospital workers and the like. But then, of course, there hasn't been as much demand for physiotherapists and dentists over that period of time. And education, there's been some small declines there, but nowhere near as significantly as what you might have expected in those early few months, given the bans on foreign students arriving. Now, the orange dots here provide you with a little bit more colour on what's going on with the total wage bill. So you can see for the bulk of industries, we've seen a large decline in wages alongside jobs. But there's some interesting sort of compositional stories that are going on. So within arts and recreation, where a large group of people would have been receiving less than $1,500 per fortnight in the lead up to COVID, you can see that the introduction of the JobKeeper package has actually lifted the total wage bill because people are now receiving $1,500 per fortnight. So there's some interesting sort of developments at the industry level. I then wanted to talk about the different labour market outcomes by sex and as well by age. So really, there were some key differences between the outcomes that we've seen for females than males. So we saw a larger decline in job losses for females, and in part some of that reflects that there's an industry composition, so there's females are slightly more represented in some of the industries that have been most acutely affected, but it's also because females tend to have a different there's more female casual workers than there are male casual workers, and so we saw a larger decline in employment. But perhaps more interestingly, and again this is 1 month and so it's difficult to make too much out of it, we actually saw of the people that lost their job, the bulk of females that lost their job went into outside the labour force rather than into the pool of unemployment. And so you can see there that when you look at the unemployment rates by male and female, the rise in the unemployment rate for females was not as acute as it was in the unemployment rate, and more of them went outside the labour market. There's possible reasons for that, and we've sort of talked about the various reasons why why we saw more people leave the labour market. But one possible explanation for it is that there were females that also took on, as primary carers, they took on some additional caring responsibilities over that period of time that saw them choose more to leave the labour market. But then what we did see, so the male unemployment rate rose quite sharply, but then we also saw that the underemployment rate for males, even though it's still higher for females, we saw a very sharp pickup in the male underemployment rate. And that's in large part because a lot of males were stood down or were on reduced hours for economic reasons. And so we've seen a large rise in underemployment for males there too. Now, I think it's unsurprising to all that it's younger workers that have borne the brunt of what we've experienced. It does tend to be the case when we've looked in previous research, when we've looked at younger people's labour market outcomes during recessions. They do tend to, their unemployment rate rises faster and much more than other people's. In part, that's because of the industries that they work in are more cyclical. But if you look at the numbers that we've seen over the month, it's hard to keep saying unprecedented, but that's really the case for a large amount of these indicators. But we've seen such sharp, pronounced falls for employment in females and males that were aged between 15 and 24. And while we've seen a rise in the unemployment rate for males and females, younger workers, it's really the decline in the participation rate that's borne the brunt of that. So we've seen large declines in younger people participating in the labour market. And I think that's something that when we think about, and I'll talk a little bit around the outlook next, it's really something that we're acutely aware of, that labour market outcomes for people early in their career are really important for determining labour market outcomes over sort of early stages of their career. And it's just a question of how well matched, how well connected younger workers remain to the labour market as the labour market recovers is a key area of uncertainty. I just wanted to, it's fairly obvious that the outlook is highly uncertain. These are the forecasts that we provided in early May as part of the Statement of Monetary Policy. And it's just, we're showing here the unemployment rate. And what we tend to do is in the Statement of Monetary Policy, we tend to show our central forecast, and then we talk about the risks both to the upside and to the downside. But we felt when we were putting together the numbers for this forecast round, the uncertainty with which there's so much uncertainty, particularly with respect to how well Australia is able to manage the virus, the uncertainty with which we had around the lifting of restrictions as a result of that. And then, of course, the uncertainty with which we thought with respect to businesses and households and how they might respond. We felt that it was important to actually show 3 scenarios. And of course, these are not the only outcomes through which we've been sort of considering. These are just really ways to illustrate what might happen in a baseline scenario and what it might take to see an upside over the next couple of years, and then what may lead to worse outcomes. But there's wildly many possibilities of how the labour market may eventuate. Now you can see here that at the time of early May, we expected the unemployment rate to be around 10% in the June quarter. And I've just showed you that the first month of the quarter, the April data, we saw an unemployment rate of 6%. Now, it's too early for us to sort of consider where we think the unemployment rate may be in the June quarter. But I think it's fair to say, and a lot of commentators are in the same position, that what we've seen, as I've said, is that there's been more unemployed people sitting outside the labour force than actually as measured. So it still may be the case that once the job seeker eligibility tightens again, that we may see a pickup in the unemployment rate. But I think when we sort of think about the numbers that we've seen, it's unlikely that the June quarter number may not reach as high as 10%, which is a good outcome. Now, what we expected in the baseline scenario was that restrictions would start to lift over the course of the next few months, and with the exception of the international travel bans, which we assumed to take place, that would stay in place until early next year. But you can see there, it may look, what we've expected, say in the baseline scenario, is that the unemployment rate would peak around 10%, and then it would very quickly fall, but we weren't expecting by mid-22 that it would be back to the levels through which we'd seen it in the lead up to COVID. And that may be surprising to some, may not be surprising to others, but when we looked at how labour markets tend to recover, you tend to see in most recessions, you'll see a really large spike in the unemployment rate, and then the unemployment rate takes a long time to come down. And in part, that really reflects that it takes some time for businesses to feel certain to hire after such a big shock. You see that some people that have been unemployed for a long time have trouble matching to jobs that are available in the labour market. And so the scenario, the baseline scenario that we've got there would be one of the fastest recoveries post a recession that we would have seen. But we felt that there were a number of reasons why we thought that would probably be the case. In part because what we were seeing was it wasn't necessarily a demand-driven shock, it was a sort of a health and policy-driven slowdown. And we thought that as restrictions were lifted, people had only been unemployed for a short period of time, and so businesses, once those restrictions were lifted, we would see a pickup in activity. And so you'd start to see people hiring. Now, the real uncertainty, and the governor's talked a lot about this in recent speeches, is to think about where the area of uncertainty is we know that restrictions are getting lifted, football games are up and running over the next couple of months, but how will households respond? Will we go out and will we go back on cruise ships? Will we go out and spend our money, or will we just be a little bit tentative in how we approach this? And it's the same for businesses. Businesses that had been thinking that they were going to invest, in early 2020, businesses have plans to think about how they were going to invest over the next couple of years and their plans for hiring. Are they going to wait till they're sure that a recovery is underway before they resume that spending and investing? So I think what we expect is that the recovery will take some time, and that we don't necessarily expect that the unemployment rate would return as quickly as what we might like. The upside scenario does see that there is a possibility that those jobs that were lost could be quickly picked up again. It doesn't take as much time as it does in other industries to hire. Normally it takes a long time to hire in a lot of jobs around education, business services, but in accommodation and food services, it's somewhat easier to hire again. And so perhaps you might see that the matching that you need to take place between people that are unemployed and people that are looking for work, that they'll be able to match a bit quicker. The downside is possibly the other way to sort of think about the downside is that what you do start to see is that the first round effects that we've seen, in which the most adversely affected industries are hardest hit, you start to see a spread through the rest of the economy. So households' balance sheets and business balance sheets are really adversely affected by the hits to household income. So I think it really matters to how wages respond throughout the entire economy. There's also been large declines in wealth for certain people. So how well will business and household balance sheets recover after this period? Of course, there's sort of some uncertainty around policy, fiscal policy in particular. And we might necessarily see that there's sort of this adverse feedback loop where it starts in one area of the economy and then we start to see it affect other parts of the economy like construction, manufacturing, and so forth. And so we could envisage a world in which the unemployment rate stays or rises to around 10, 11% over that period of time, and then only is able to fall gradually as the economy picks up. So they were certainly the scenarios that we showed in early May. As I said, the situation is evolving every day, where we look at sort of various restrictions that are getting lifted. And so I imagine when we go back to forecasting as early as next month, we'll be thinking about whether or not we necessarily need to change these.